Is the Australian dream of owning a home dead? Or are we simply looking in the wrong places? Right now, as we speak, there are suburbs in Australia where property prices have jumped by over $500 a day in the last month alone. That is more than most people earn in a week. But here is the shocker. While everyone is fighting over Sydney mansions they can't afford, smart investors are quietly buying up properties in areas that the mainstream media is completely ignoring. We're talking about hidden pockets with high yields, low vacancy rates, and massive capital growth potential. Today, I'm going to show you the data that the banks don't want you to see. I'm revealing the top 5 suburbs to buy property in right now and why waiting another month could cost you tens of thousands of dollars. Stick around, because number 1 on this list is a suburb you have probably never heard of, but it's about to explode. G'day everyone, welcome back to the channel. If you're new here, we decode the Australian property market so you can build wealth without the hype. I'm diving deep into the latest CoreLogic and PropTrack data to give you a genuine, unfiltered market update. There is a lot of noise out there right now. Interest rates are too high, the market is going to crash, it's a bubble. We've heard it all before. But the data tells a different story. We are seeing a multi-speed market. It's not one single property market, it's thousands of micro-markets operating independently. We're going to break down the big 5: Sydney, Melbourne, Brisbane, Perth, and Adelaide. We'll look at median prices, the trends that are defying gravity, and most importantly, I'm going to give you specific suburb examples that act as a blueprint for where you should be looking. Whether you're a first-time buyer trying to get a foot in the door, or a seasoned investor looking for yield, this video is your roadmap for the next quarter. Let's look at the big picture first. Nationally, property values are still rising. Despite interest rates holding steady at restrictive levels, demand is simply outstripping supply. It's Economics 101. Listings are down roughly 15% compared to the 5-year average in capital cities. People are holding onto their homes, waiting for rates to drop before they sell. That creates a scarcity factor. When you have low supply and high migration with over 500,000 new migrants entering the country in the last year, prices only have one way to go. But here is where it gets interesting. The gap between the most expensive cities and the most affordable ones is closing. Sydney and Melbourne are stabilizing. They hit an affordability ceiling. But the smaller capitals Perth, Brisbane, and Adelaide are sprinting to catch up. Let's dive into the specifics, starting with the biggest market of them all. Sydney. The heavyweight. The median house price sits comfortably over $1.4 million. For many first home buyers, that number feels like a door slamming in your face. The rate of growth has slowed here. We're seeing a 0.3% increase month on month, which is sustainable, but not explosive. But don't let the average fool you. The top end of the market, the eastern suburbs and northern beaches, is cooling. Auction clearance rates there have dipped below 60% in some weeks. However, the affordable belt, Western Sydney and the Central Coast, is absolutely on fire. Visual map zooming into St. Mary's and Penrith. Pop-up box showing infrastructure project, Western Sydney Airport, Nancy Bird Walton. Why? Because people are being forced further out to find value. And where the people go, infrastructure follows. Take a suburb like St. Mary's. It is the key transport hub for the new Western Sydney Airport, which is due to open in 2026. This isn't just a plan anymore, the runways are being paved. You can still find decent blocks of land here for under $900,000. Compare that to the inner west where a crumbling terrace costs $2 million. The value proposition is shifting west. Another one to watch is Mount Druitt. Historically, it's had a bad reputation. But gentrification doesn't care about reputation, it cares about price. We are seeing young families move in, renovate, and change the demographic completely. Moving south to Melbourne. If you are a contrarian investor, someone who likes to buy when others are fearful, Melbourne is your playground right now. Melbourne is currently the most undervalued capital city relative to its historical performance. Prices have barely moved in the last 12 months. In fact, in some areas, they have dropped slightly. Why is this happening? Two reasons. 1. A surplus of new builds in the outer ring. 2. Changes to land tax that have spooked investors, causing a sell-off. But for a buyer? This is your window of opportunity. While investors are selling off, owner-occupiers can snap up bargains without fighting 20 other people at an auction. Look at the outer north places like Craigieburn or Mickleham. You can get a modern, four-bedroom family home for $650,000. That same house in Sydney is double the price. That same house in Brisbane is now $850,000. Also, don't ignore the regional corridor toward Geelong. Areas like Corio are still incredibly cheap, with strong rental yields. My prediction? When interest rates drop, Melbourne will rebound hard in 2025. Buying now is buying at the bottom of the cycle. Now, let's talk about the crowd favorite, Brisbane. The Olympic runway is real. We are seeing consistent 1% monthly growth in established suburbs. That is massive. Brisbane has fundamentally changed. It is no longer a big country town. It is a global city in the making. The migration from southern states hasn't stopped, it's just normalized. The secret is out on Brisbane's inner ring, so you need to look further out for the gains. Ipswich is undergoing a massive gentrification. Suburbs like Booval and Bundamba offer flood-free pockets where yields are over 5% and entry prices are still starting with a 5 or a 6. We are also seeing the Logan corridor continue to perform. Suburbs like Marston and Crestmead are very popular with investors because the rental demand is relentless. Vacancy rates are practically zero. If you're an investor, Brisbane is still the sweet spot for cash flow plus capital growth. Perth. Wow! It is the best performing market in the country, hands down. We are talking 20% growth year on year in some areas. Inventory is at record lows. Houses are selling in 8 days on average. You have to be quick, and you have to be aggressive. Suburbs like Armadale have seen 30% growth in a year. Is it too late? A lot of people are asking if this is a bubble. But you have to remember, Perth prices were stagnant for 10 years. This is a correction to the upside. However, be careful. Don't just buy anything because it's cheap. Look for the ripple effect. Suburbs next to the high growth zones. Look at Balga or Gosnells. Prices are rising, but they are still incredibly cheap compared to the East Coast. If you are buying in Perth now, you need to have your finance pre-approved and be ready to make an unconditional offer. That is the reality of this market. Adelaide is the silent achiever. It used to be called the city of churches and slow growth. Now it's the city of consistent capital gains. The local economy is shifting. The defence contracts, particularly the AUKUS submarine deal, are bringing high-paying jobs to South Australia for decades to come. The Northern Corridor, particularly around Elizabeth and Salisbury, is providing incredible value. We are talking about solid brick homes on 700 square meters of land for under $600,000. That is unheard of elsewhere. And unlike the mining towns, Adelaide's growth is not boom and bust, it is steady, reliable, and driven by owner-occupiers. So, what should you do with this information? If you are a first-time buyer, stop waiting for the crash. The data doesn't support a crash. It supports a supply shortage. The longer you wait, the smaller your deposit becomes in real terms. Get your pre-approval sorted immediately. In markets like Perth and Brisbane, if you can't sign a contract on the spot, you lose the house. Consider rent vesting. Rent where you want to live, maybe near the beach or the city, and buy an investment property in a high-growth area like Perth or Western Sydney. Get your foot on the ladder. If you are an investor, yield is becoming important again as interest rates bite. Don't just chase growth, make sure the property can pay for itself. A 5% yield is the benchmark you should be aiming for in this high-interest environment. And look for ugly ducklings. Properties that need cosmetic renovations. In a hot market, people pay a premium for move-in ready. If you can paint, rip up carpet, and do some landscaping, you can manufacture equity instantly. The Australian property market is resilient. It's tough, yes, but it rewards those who take action and do their research. Don't just follow the herd. Look at the data, look at the infrastructure, and make a decision that suits your budget. Remember, the best time to buy was 20 years ago. The second best time is when you can afford to hold the asset for the long term. If you found value in this market update, please hit that subscribe button. It really helps the channel and ensures you don't miss our next suburb deep dive. And if you want to know exactly how to negotiate $50,000 off your next purchase, watch this video right here. Thanks for watching, and happy house hunting!